Okay, we are live. How are you doing, everybody? Welcome to another session. It's Tuesday today, a lot of activity and some news coming out after a kind of boring day yesterday, at least in the indices. Let me know that you can hear me and see as well. And we'll dive into the market in a second. Okay. So I'll share my screen for a second and we'll talk about a few things today. The indices of the US market, so the Nasdaq, the S&P. We're going to talk about also the earnings season that is starting from this week, basically. Um, the US market, the companies in the US market reporting their earnings every quarter. And that definitely important for for everyone who's trading, either if you trade in stocks or if you trade in commodities or Forex as well, because eventually all of the markets are affecting each other, right? So once you understand that and try to find the correlation between those, you can find more opportunities to trade and better performance at the end. So let me share the screen and we'll start with the NQ, the Nasdaq 100. By far the most important index in the US market, especially in the last 5-6 years. And right now we're looking at a 1 hour chart, hourly chart. So every bar represents our 1 hour of trading. The index, as you know, is basically moving nicely the last few days, but consolidated at the bottom. We talked about it in the previous videos many times. And right now, last week, we talked about this sort of reverse head and shoulder. So this is the shoulder, then the head, then another shoulder. Instead of breaking through it, we dropped down to the previous low. We talked about that as well. And from there, we started to basically creating higher highs and higher lows. And right now, we're kind of consolidating, dropping down a little bit. And looking at the chart at the moment, it looks like that on the bigger picture, we still have enough space to go up and on the Nasdaq and basically reach those liquidity levels between the 15,300 to 15,400, 450. But before reaching that, we might see another drop just to take more liquidity. Obviously, as the market goes, and again, doesn't matter if it's the indices or any type of pair, we always moving within liquidity levels, right? The market want to go to a certain level in order to take liquidity, buy buy more shares or buy more lots or buy more contract and move to another liquidity where they can dump their assets. So the next level that I see is kind of clear and is this one right here. So this is the next level if we will continue to the downside. It looks to me that we can do that. We'll drop to a 1-minute chart in a second to see if we can actually take advantage of that today. But looking at the bigger picture, you can see that we can drop down to this level at around 15,130. And from that moment, we might see some buyers coming in after this resistance will become support potentially. And from there, taking liquidity out and moving higher to those resistance levels at the top at around 15,300, 15,400. So this is like the bigger picture that I can see currently, and the market looks pretty good to do so. This is definitely a nice place for the market to play around with. So if I'm trying to create any scenarios we can work with, is one will be, and again, we will drop to a 1 minute chart in a second, but one can be a drop to those levels, the support level that we just talked about, finding support here. So you will see like maybe a candle dropping down, but closing up, sort of like a hammer. And then from there, try to take long and go up with that. That's one option. The second option, or the second scenario that I can see, again in a bigger time frame. So we're talking about few days. That could be also a move to the upside all the way to those resistance levels, and from there try to take the short side and maybe drop down even to this level again. The problem with that is that this is a very big area to trade in. So you got to manage the trade correctly. So let's say if you start your short position at around the beginning of this resistance level, so at around 15,300, then you need to give yourself enough space in order to add more to your position, so you won't be out just because of some games that will be within that range, right? So if you start your short position at around 15,300, then you need to add, just start with 20% risk and then add as it goes a little bit higher to a full 100% risk that you're willing to take. So if it's $100 that you're willing to lose on that trade, start with a risk of $20, then add another $20 risk and another $20 risk and so on. So this is kind of hard to manage just because it's a wide range to trade with. On the other side, this long position at around 15,100 or 130 could be much more easier. If the price will drop to this level, it can drop maybe to like 30 points or so, and then bounce from it. So you know your stop loss, you know how to manage it. When it comes to wide ranges, it's kind of harder to manage the trade. Again, you can do that, but it's more sophisticated, I guess, or more complex. So this is my point of view on the Nasdaq. Feel free to write some symbols if you want me to check them out as well. And if you have any other opinions, feel free to. What I'll do is go to the VIX, the volatility index, and let's see how it looks like today. For those of you not familiar, the volatility index basically works the opposite to the S&P and also the Nasdaq, but it's basically reflecting the put options in Chicago. And whenever the VIX is dropping down, the S&P rising up, and the opposite. So what we can do with the VIX, instead of just trading it, you can basically mark the levels that you want to that you find, right? Support, resistance, supply, demand, and from that understand what the market supposed to do. So for example, in this case, again, 1 hourly chart, you can mark the levels, so you can definitely see a nice area right here, right? And that will be a support level for the VIX. So let's say if the S&P will rise, then the VIX will drop to this level right here. So if the VIX will drop to this level, it will find support. The VIX will go up, the S&P will drop down. So you can work with this asset, basically the VIX, just to correlate your trading and your analysis with the VIX and the S&P and the Nasdaq. So those things will definitely improve your trading if you start to implement it during your analysis. Don't drop below 1 hourly chart, like 1H hourly chart, because then it will be um, too, I guess, flex or not really showing the exact areas. Try to keep it on an hourly chart or maybe even a 4-hour chart. But that will be amazing for anyone that will start using the VIX, because you can see a lot of the trades super correlated with the S&P, and once you understand that, you can act as well. So for example, you can see this resistance level, right? Resistance that became support. So if the price of the VIX will go up, then you know you can expect a drop from the VIX around this area. A drop in the VIX, meaning that the S&P is moving higher. S&P and the Nasdaq mostly will go together anyway. So this is a great tool that you can use. Obviously, the same level, the same thing will apply here around this level at the 1950. If the price will go there one day, then you can expect resistance from the VIX. Resistance from the VIX meaning support for the S&P and the opposite. And of course, you can find some, we talked about it previously, you can find some correlated assets like currencies, pairs, that goes either the opposite or with the Nasdaq, for example, what it was like Japanese, right, or Canadian, so pound yen or USD CAD, that will be also very similar or the opposite when it comes to trading pairs. So try to work that as well. So this is the VIX and the Nasdaq. Let's go to some currencies just to look at the market. Let me pull it up. And afterwards, we'll talk a little bit about the earnings season and see how can we use that again to our advantage. So you can see my chart right now. I'm looking at the CAD yen, and let me take a bigger time frame. Let's go to the hourly chart. Some trades that I had previously, it bounced a little bit, as you can see, retraced after the jolt report or data from previously, like a week and a half ago. Right now, bouncing again, and I don't see a whole lot to do with it currently. Euro dollar dropped very nicely lately, obviously, and you can see that we're reaching that resistance level at around this area of 0604. So the first thing that comes in mind is, we did a nice drop and reached that major support level. So currently, breaking through it, or what I can do with it is creating scenarios of breaking through that level, right? Retesting it, and only then try to go long. So only after it will basically prove itself that we broke through that resistance level. Another option could be just a bit before that. We can play around with it, and as long as it holding resistance, we can try to short it. It shouldn't be a major drop to the downside. I wouldn't look for, let's say, this drop or even this one. It's actually could be a small one, just to take some scalp. So basically, the price will go to this level. We'll start shorting it. Once it started to drop, we can add more to the position and then try to catch the move, probably to this area, so to 05791. So kind of short area to play with, but can easily give you like a 1-to-3 ratio if you entered correctly, obviously on the lower time frame. So this is something that you can play around with. Again, not to try to take the full move to the downside, because in most cases, in this situation at least, it might not happen. The potential or the probability that it will drop are lower than breaking that level. So one option is just waiting for the break, retest, and then go long. The other one is just play around with it and take the short right at the top, try to catch that 2-to-1, 3-to-1 ratio. That could be a nice one. Although, as I told Alex before, I don't like the euro dollar. I like those that can actually move, and for some reason, it's not the euro dollar. But let's look at the dollar yen. Obviously, after a week and a half ago that we had this, a week ago actually, that we have this nice drop. The price is consolidating, moving sideways. You can see that we have this support at around 148.311, and above it, the range is at 149.428. Now, the smartest thing to do is actually wait until we'll break through that those resistance or support, because in most cases when you're playing around the range, you're just trying to catch the next move, but in most cases it will be like a small move, right? A portion, a very small portion, comparing to trying to catch it, trying to catch it from, you know, from those areas after we did a nice move on, or after we dropped and broke that range, and then try to catch in. So in those cases, when you trade in range, it could be profitable and it could be okay, but in most cases it won't give you enough space or a big move. So one thing will be play around with the ranges. Once we reach the resistance level, try to short it. Maybe it will drop to the support again, buy it at the bottom and play around with those resistance and support. But the best way will be to wait until it will break that support. This is actually, this is the area. So wait until it breaks it, and then retest it, pulling back, and then you got enough space to drop all the way to the next major support level. And you have a nice risk-reward ratio, right? Dagmawit, thanks so much. So, and that also very interesting, because that's the low of last week drop. So it could be a very nice place to start, to obviously to cover your short if you took that short, but also try to catch the bottom here and maybe flip it to the upside. So that's yeah, so that's the dollar yen. Let's look at the CAD yen. Again, as I said before, moving kind of made a nice bounce, but I don't see a lot to do with it currently. We need to reach those support or resistance levels in order to actually start doing something. So we can mark those levels. One is obviously here, and the second one is right here. Kind of clear and very easy to spot. So the scenarios could be, in this case, moving upward, not doing anything currently, just waiting for that resistance. From that moment, just going short, one option. Second option is once it will break that resistance, try to wait for that another move to the upside, reaching that resistance, and then go short. Both scenarios are short oriented, and it looks pretty good for me. Try to catch those again, those movement. Make sure that you have enough space to play with the risk reward, because let's say if you took that short at the top, then the next big support is the previous resistance, right? So let's say you took that short. If you don't have enough risk reward until you reach that support level, then this is not a good trade to take. So either be aggressive once reaching that resistance level and with a tight stop loss, something that I don't uh, like. So in this case, if you catched it well and you have enough, do that. If not, what you can do is also start your short here with a small portion. So let's say you're risking like 20% again. So you're risking $20 out of the $100 that you're willing to lose. Once you see that the trade is going to your favor, and let's say broke that the support, that red line right here, then you can add more either at the break, or the best way will be at the retest or the pullback. So it should be something like that. We hold on. Okay, so we are basically starting the position right here with $20, 20% of your total risk. Let it in pride, not doing anything, breaking that support level, retesting, and then adding more to the position. And now you have a nice trade and a nice move to the downside that could be all the way to those support levels, right? Thanks, Stanley. Thanks so much. Okay, so let's jump back to the earnings season. As I said before, we are starting the earnings season in the US market, and earnings brings a lot of movement to those stocks, right? To the market in general, but also to individual stocks. And for me, it's amazing because obviously the stocks are gapping up and down, and we as traders can take advantage of that. And I talked about it before, even if you're currently only trading Forex, that's totally fine. But since the idea of traders is to find opportunities and trade them, you can easily increase your chances by just knowing more ways to trade, like more strategies, more trade management, and also more markets, like the US market, like trading stocks, right? Because at times when you maybe don't find the right opportunity or the right setup on your Forex pair, you can easily go to the US market and try to find the next opportunity there. So the idea is to just know more, have more tools. Once you have that, you can actually apply it and try to catch more opportunities on a daily basis. So in that case, let me share my other screen here, and we can talk about it. And if you guys have anything else you want to add, feel free. Hold on, for some reason it's blocking. Okay, I can't really share it because there are so many advertise on that website. But what you can do is go to yeah, let me share the screen again. Okay, so what you can do is basically go to the any kind of website that provide information about earning season, and you can basically just scan through those companies or those stocks that reporting every day, and try to, at least at the beginning, if you guys don't trade stocks, you can just watch it, right? So for example, you have this week or the upcoming week, we will have the bank that will report, right? So Citibanks and JP Morgan, Goldman Sachs, Bank of America, Wells Fargo, all the big companies, all the big banks in the States will start the earnings season. And that could give you two things. First, watch them and see how they react after an earning report. It could be to the upside or the downside. You will start to understand a little bit about the movement or the potential move in the US market. The second thing is just to get an idea of, like in the macro level, get an idea of what the banks are doing, right? This is obviously, the banks are one of the most important elements in the trade in the world of economical world in the States and in the world. So once you understand what they are doing or the reports, you kind of get a little bit more macro perspective of the entire world, right? Or if you see that at the end of the earning seasons, you will always have retail companies like Target and Walmart and Kohl's. So once you following them and see how they report it, then you can try to understand what's going on in the retail world, right? So those are kind of elements you can use for your advantage, like in general understanding of the economy, or for trading, just following the big names, try to see what they are doing. Um, okay, is it possible to trade one pair in one setup for life? Okay, that's a good one. That's a great question, actually. Let's talk a little bit about that. Generally speaking, you can, but it will be super hard because no matter what you trade in, either pairs or shares, whatever it is, basically you have cycles in the market, right? In the currency market and in the US market, like the stock market or the commodities market, whatever it is, you have cycles and period time. You have times that the price will range mostly. You have times that it will be more aggressive to the upside or the downside, like a bullish, bearish market. And you don't want to put yourself in a place where you can actually execute your setups just when you have a bullish market, right? If you're short selling penny stocks, that's fine, but you cannot do that for every period of time in the market, because in most cases, when the market will be bullish with a lot of momentum, they can easily wipe you out. So you gotta have arsenal. Look, this is maybe not the right time to talk about it, but okay, let's say you're like a military, right? You're like a one-man army. So you want to have guns, and you want to have like rifles, but you also want to have tanks, and you want to have aircraft, and so on. So so you gotta have this full arsenal in order to execute well, because the market will change or change period of times. If you're only trading, um, you know, if you're only trading buying the dips, right, looking for the drop and then buy it, might work for many years or maybe certain times of the year. But generally speaking, if the market is very bullish and momentum, then you want to go with just classic breakouts, right? So this is why I wouldn't go and just focus on one setup and one pair. It could work, but you got to understand that you will have those sort of like a roller coaster, and you need to understand when the setup is at its best, and then attack it, or wait until you will get the next wave and or the next time in the market when your setups will be good again. Instead of that, you can create more or learn more setups and build yourself this arsenal, as I said. Okay, so US market is open. Maybe before we'll finish, let's see if we can understand something from the beginning of the market. So Nasdaq is running a little bit. Again, this is a 1 minute chart, right? So you cannot really understand a whole lot from here. So once you don't understand a whole lot, then you don't wanna trade, right? You wanna give yourself, and this is something super important that I see a lot of the traders fall into, because you're in a range of everything here from the previous day or the day before all the way here, right? This is not the place you want to really trade. Obviously, like I said, you can play around with it a little bit, and if you're more advanced, you can try to take your small, like scaling a little bit, trying to take scalping a little bit, trying to take your shares. But generally speaking, this is not the place you want to trade. You want to trade where the big movements are coming. So only after we'll break that support, only after we'll break through that resistance, then you will find yourself with more potential move to the upside. So one thing that we mentioned is dropping to those levels, and if the price will do that, then we can maybe scale in and buy the dip on the Nasdaq. If you guys looking at a pair there that is correlated to the Nasdaq, you can do that as well. If the Nasdaq will reach support, this is something that I would look for. Again, between the 15,130 all the way to the 15, all the way to the 15,100. So like that will be the entries and the stop at the bottom, while we're trying to push to the upside. Alrighty, guys. So I wish you best of luck. Make sure you trade well under the right risk management. Manage your trade. Don't enter once with full risk. Try to break it into a few chunks, and we'll be in touch next time. Have a great day. Bye, guys.